Good morning, traders. It's Tuesday, the 10th of January, 2017. It's 8:01 a.m. Chicago time and 9:01 Eastern. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The news overnight's fairly light. The key release was China's PPI came out strong year on year, 5.5 versus 4.6. This was um, this was the fourth positive print and the highest level since September 2011. There's some analysis on China's economy, and the expectation is um, the next bubble, the next troublesome thing is coming from there. So I'm always keeping an eye on what is going on with the Chinese economy. Inflation, the National Bureau of Statistics showed consumer prices rose 0.2% in December, making for a 2.1% year over year gain. Pork prices, a staple of a Chinese diet, saw its price rise 6.2% versus the prior year. And of course, the British FTSE is up zero point 0.4 at 72.64, making for the closing at record territory for the ninth straight session. And in case you haven't noticed, the U.S. dollar has also made a recovery. It's back up to 101.96. Um, so then there's some stock stuff that you can look up. I'm not really too concerned about that. And then as far as what we're expecting today, wholesale inventories in the U.S. coming out at 10 o'clock today for November, expecting 0.9%. This can be a market mover, although it's not expected to be. At the same time, the JOLTS job openings numbers coming out at um, looking for 5.5 or uh, 5,500, 5.5 million, I think it's supposed to be for November. And then also wholesale trade sales month on month expected at zero point 0.5. That pretty much wraps up what we get today. I'm not seeing, other than some treasury auctions, I'm not seeing much else on the calendar. Remember, Thursday and Friday are the bigger days. Let's switch gears and look at what we expected yesterday versus what we got yesterday. The primary hypothesis was for responsive buying up to 2271 to 2272, with a fair amount of resistance expected above. Expected a rotation down, and the key target below is 6450. Once it gets to 6450, it's expected to um, chop around, consolidate for a bit, and then resolve itself upwards. That's what I was looking for as a primary hypothesis. Secondary hypothesis is that it doesn't find its way up, but instead moves lower off of the open and open auction expected. It moves down to 64.50, pushes through by a little bit, looking for a higher low. As you can see here, I'm marking a low, higher low, and then look for the wave up back towards 71. That was hypo 2. And then hypo 3 was the rally scenario where it's an open auction, quiet for a while, pushes to 71, shallow pullback, and then gets back above 71. And in that case, we would be looking for the 2277 to be breached again. That did not happen. What happened yesterday was hypo 2 almost to the tick. We had. We had our choppy back and forth open, so you could see the opening swing is 67 to 69, and then we moved down through the 64.50. 64.50 is the MC point of control, and then we had that low, higher low, although it went pretty deep, and then from there it started to push up. The high is 70 and a quarter, missed the 71 by 3 ticks, and then it just sat sideways. It wasn't able to pull back and continue to put pressure on that 71. It sat sideways. Yesterday's profile is pretty much balanced with a downward skew. The acceptance area is heavy to the downside. You could see that there's quite a ledge right here. where volume drops off quite rapidly. The expectation in the way it closed, the fact that it held the mid on the close and rotated back down to put in a lower low, and the fact that we have almost a double bottom. If you look at the 63.50 and 63.75, this is basically within the double bottom stat because I allowed for a tick in that study. So we had a double bottom that stayed intact. We have a normal variation day. It broke to the upside, finished in the middle. It gave us weakness into today's session. So the expectation overnight is for continuation lower, and it went to 22.59.50 overnight. So it's auctioning okay. Yesterday was very choppy, not so easy to trade. The Monday after non-farm payrolls usually is not. So that's what we got. As far as what we've done since then, here's the overnight. The overnight shows we opened where we closed. We drifted downwards immediately. Again, continuation of this move here, pullback, continuation. We drifted down all the way down to the low at 59.50 and have pushed all the way back to yesterday's point of control, which is right there. So since then, we've consolidated. Notice that the point of control overnight is almost overlapping the point of control from yesterday. The market's imbalanced. This looks like it explored lower and is fairly well done to the downside. Price, the overnight inventory on price is even, is balanced. The overnight inventory on Delta is almost even. It's slightly lower, slightly short, but nothing to write home about. So overall, this looks like the overnight session did its job to the downside, and the market's finding strength and is likely to push higher, and that's what I'm expecting this morning. So there's still a fair amount of resistance above. The key thing to walk away from, though, to walk away with is what I talked about yesterday. What I mentioned is that we are likely to push to the 64.50 here and get stuck. Note yesterday's point of control is just above 65.50, just 4 ticks. We basically have pushed above, put in a low volume node. So this price is very important here. The 22.71 is what divides us from the prior acceptance versus the volume that we put in on Friday. So this price continues to be resistance, in my opinion. And we are back at the balance point, which was 64.50. Again, just as described yesterday. So this morning we're opening at the lower end of value and yesterday's range. It looks slightly weak, but given what we did overnight, I'm expecting buyers to fight this back up. So what does that give us as far as the primary hypothesis? The primary hypothesis is almost the same as yesterday. Notice that we're at near all-time highs. The VIX is is moving lower and lower. It's trading at about 11 and a half. And overall, what we have is what we're going to continue to have over the next few days is this continuous compression in this area. Near highs, as we've seen many times, likely to push new all-time highs again. So this morning, my expectation is for an open auction. I'm expecting the market to test lower. I'm expecting buyers to be found. I'm expecting it to hold the 64.50 area and start pushing towards that 71 again. That's my primary hypothesis. So I'm looking to buy any area where let me back up a second here. This by no means is a trade recommendation, and by no means does it mean that you're supposed to just buy at the open. Okay, so I got an email yesterday saying, well, you said, this is an open auction. The primary hypothesis is it's likely to push up higher before it drops. And so I bought on the open and lost money. How can you say you make money if you just follow that primary hypothesis? This is not what I'm saying. What I'm saying is these are the most likely scenarios. I still have to wait for the market to give me a little bit of information as to the fact that buyers are stepping in, and I'm simply using order flow to do that. This is the order flow since it reset at the end of yesterday's session, but I'm looking for size to come in. I'm looking for size to hold. For example, this white area represents size. I'm looking for a push in here, collisions, and I want to see that buyers are stepping in before I jump on the train and go long. I'm not blindly stepping into it. So it's just really important to understand that you can't just blindly follow the primary hypothesis. I have no idea which one of these plans the market wants to play. Nobody does. Nobody knows what it's likely to play. But the primary hypothesis again is for it to poke lower and then start to consolidate and push higher and target 71. That was the primary hypothesis. Now, the secondary hypothesis is the opposite because if it's not able to push lower, then I'm looking for a push higher at the start. I'm looking for it to find sellers, consolidate at 64.50, but still end up trying to push higher. That's the secondary hypothesis. The tertiary hypothesis is it just simply cannot find any um, it cannot find any buying pressure, and it's starting to move down with this short-term trend. Yesterday was an inside day. We have not tested the lower end of that, so the tertiary hypothesis is a quick burst up, and then sellers step in, move it out of the range, and then we start to tackle the overnight low and move towards the first stop, which is this high volume node, which is also the expected downside range for the week at 2257 and a quarter. That would be the third hypothesis. So how do I detect the third hypothesis? I look for sellers to step in and then the rotations to be exaggerated on the downside and very weak on the positive side. So I'm looking for downward pressure, selling pressure to be continuous for the third hypothesis in order for me to say, you know what, this thing is no good. Buying is no good for now. I'm going to look to sell on pullbacks. The market has been pushing higher near the end of the day, so be careful of that. But that's really the plan for today. So the first, second, and third hypotheses are in front of you. Please do these yourself and just compare notes with me. It doesn't mean that I'll be right. I'm never going to claim that I know what the market will do or have some secret sauce. There is no secret to trading. There's no such thing as a secret in trading. It's just whether or not you're in the flow and can see what the market is trying to do and then getting yourself on the right side of that, which means I rely not only on a 15-minute chart, I'm looking at my trigger chart, I'm looking at the profile and how it's rotating, but also I'm looking at these numbers here. I'm looking at the rotations. What kind of rotations am I getting to the positive or to the negative? Those give me an idea. And then on top of that, to execute, I'm executing right on this platform here, which shows me how the order flow is pushing against the depth market in the book. This is a key tool for me, and so I use it to try to the best of my ability, push against some sort of support if I'm getting long or some sort of resistance if I'm getting short. And I can detect what is fake and what is not here by following these bands and seeing what size is doing. Is it pulling as price comes in, or is it getting wider and brighter as price moves down? Bands that have brightness increasing as price goes down give me against a key area or against an area to trade, give me an idea that this is likely to hold at least for one rotation of 2 points, 2.5 points, which gives me enough space to get my risk laid off and to move my stop and my theoretical average away and sit comfortably in the trade. That's the goal. So that's pretty much the whole thing. It's was like a crash course in the trader bite and execution, but there it is. I'll leave you with that. Hopefully you're gaining something from these still. We've been doing these for almost 4 years now. I know that a lot of you have come up with your own process and are following that, and that's the goal. You have to make this your own. If you haven't heard the recent interview I did with Futures Radio, I invite you to do that. It's on my Twitter and it's being tweeted around, but I cover a lot of what it takes to really make the turn in this business without secret sauces, without special wording or anything like that. It's plain and simple. Okay? Good luck, and I'll catch you tomorrow. Take care.